Timing, as they say, is everything, especially with respect to when the Federal Reserve might increase interest rates for just the second time in about a decade. In a speech today, Federal Reserve Chair Janet Yellen did not say when a hike could come, backing off comments she made just a few weeks ago. Last month, she said rates would move up again in the, quote, coming months. Today, she dropped that reference. She also said she and her colleagues will wrestle with last week's weak job data when they meet next week. Investors like the sound of that because it suggested that a rate hike is now off the table. Dow Jones Industrial Average up 113 points to 17,920. NASDAQ added 26, and the S&P 500 rose 10 to its highest level of the year. Steve Liesman has more now on the Fed chair's forecast.
Fed Chair Janet Yellen said in a major speech the Fed remains on track to raise interest rates, but, reacting to Friday's dismal jobs report, declined to say when that rate hike might come.
If incoming data are consistent with labor market conditions strengthening and inflation making progress toward our 2% objective, as I expect, further gradual increases in the federal funds rate are likely to be appropriate and most conducive to meeting and maintaining those objectives.
2 weeks ago, Yellen said a rate hike could be appropriate, quote, in coming months, a phrase she pointedly omitted this time. She called the Friday jobs report disappointing and said the recent jobs slowdown, quote, bears close watching. But she noted strong payroll gains over the past several years and said she expects the economy to pick up from a weak first quarter. Yellen also said she expects inflation to move towards the Fed's 2% target as the effects of the strong dollar and low oil prices wane. Yellen said the economic outlook is highly uncertain and pointed to four key areas of concern. They include resilience of domestic demand, whether or not consumers are spending, foreign economic weakness, with particular concern about repercussions of the UK leaving the European Union or Brexit, and productivity growth. Yellen saying she was cautiously optimistic about that, as well as inflation. She offered a pretty upbeat outlook for each area of concern. Overall, Yellen affirmed the market's view that a June rate hike is unlikely and probably one in July as well, barring a strong bounce back in jobs. It was clear that before the Fed hikes again, the Fed chair wants more certainty that her forecast for a rebound is the right forecast. For Nightly Business Report, I'm Steve Liesman.